Hey everybody, welcome back to Markets and Sectors. My name is Mike Fairborn. It's great to be here with you today. Joining the chat by a good friend and colleague of mine, 25 plus year vet, Mr. Ben Watson in the chat. It's a privilege to have him on board with us. Folks, today I want to take a look at, namely some of the key sectors that have been breaking out. Technology, consumer non-discretionary, very interesting. I want to take a look and see what's behind the scenes, what might be pushing some of those sectors a little bit higher. Remember, folks, you can join Ben and I on X. My handle is Mike Fairborn CS. You just want to make sure it's all one word, Mike Fairborn CS. And then also Ben Watson CS has got some great stuff as well, of course. So be sure to tune into that if you are in fact interested, folks. And with that, let's hit some disclosures to get the show on the road here. Information here is provided for general information purposes only. Although we do look at technical analysis quite a bit in this class, Schwab does not recommend the use of technical analysis as sole means of investment research. Paper money software application is for educational purposes only. Investing does involve risk for some products more than your initial investment. There's a look at futures. We are going to look at futures here, but just the futures as it relates to maybe some of the money flow recently. What have we seen amongst the different groups as it relates to money flow? So we'll hit that. We'll go into that in more detail. Past performance is no guarantee of future results, and historical data should not be used alone when making investment decisions. The STAX the STAX is not a tradable index. The STAX should not be used as an indicator or predictor of future client trading volume or financial performance for Schwab. Oops, sorry about that. Okay, don't know how that happened, but there we go. We're back at it. And let's go ahead and just share our main screen here and take a look at the markets. Now, as a quick note, we're going to get to that in just a second, but before I do get there, there is a look at the S&P 500 clearly, folks, taking out some key resistance that we'd seen over here. Big Fibonacci levels right off that big move down. That 3-month consolidation through here up to the 61.8. We took out the 61.8, took out additional resistance, and we had a big gap there on that the U.S.-Chinese tariff pause, the 90-day pause in terms of tariffs as they work out some of the details. Now, there is the strong gap to the upside. What I wanted to measure here, because we do not get money flow, we don't get a money flow read on the SPX. The SPX is an index. We don't have volume with it. But you can see I do have money flow in here. The RSI, really quite strong. No real sort of negative divergences with the RSI. RSI trending nicely. How about the money flow? Now, with the money flow, of course, we have to switch over to our ES, /ES, to gather a look at what's been going on with the money flow and just seeing how volumes are coming in as sort of a reference to potential performance on the S&P 500 in terms of just money flows coming in, buyers relative to sellers, really taking a look at cumulative volume here. Because it's difficult sometimes when you get a move like this, it's really quite strong, but the volumes have been quite moderate relative to this big kind of sell-off volume and sort of bottoming volume, right? That's different. I mean, it is, but this can be volume still. That can come over here. Let me draw a line all the way across here. You notice that level of volume? Did we ever reach that level of volume when prices were on an extended upward trend? The answer to that, folks, is yes, we did. Historically, looking at this in the past, we've been able to do that over the past 1 year. This volume, is it being accumulated or distributed? That's one thing the money flow can help us out with. Now, let's just make some quick comparisons here. Money flow high right there. High of the money flow relative to the chart right there. There's your money flow high. This is the actual money flow high. Where did we break it at? Folks, we broke it right there. We broke higher on the money flow right here. How does that relate to share prices on the ES? This is really interesting. You get some of the more interesting kind of areas where money flow says you'll take out that high. We had enough indication right here when we took out this little resistance level, according to money flow, that is. According to money flow, the chart was just barely saying change in trend. That's just slightly a higher high. But according to money flow, we had a little bit of a breakout here already. And that says if we can break above this money flow high right here. Well, we're going to take out these highs, and it did deliver. Now, did it know what was going on with China, US? No, but there could have been smart money working behind the scenes. I know the president was saying, "Hey, we've got some good, some good announcements upcoming and things to make," and didn't know the extent of that. But that was the move, and the market responded accordingly, breaking a high. So, having said that, we are seeing strength from a volume perspective if we relate that ES to the SPX, and we just do that for volume. We hit those disclosures, but then we go through there. Well, hey, thank you for that. I'd never eat here. Sometimes I get lucky. Sometimes my mouse doesn't slide off my mouse pad, or I've had it slide off my desk before, and that gets a little, those lines aren't exactly straight. I'll say that. But we do get them straight sometimes, probably because I'm dealing with a mouse I've been using for a little while. But hey, welcome all. Good to have you on board. Just taking a look at some broad comparisons right now. Are we getting other additional indications of a possible move higher? That's the key point I wanted to address there. Now let's move on to NDX, a little bit more tech heavy. Oh, a little bit bigger moves too. Remember, we've been speaking the last few weeks about if the economy gets a little bit stronger, tech tends to lead the way. We start to see more money flowing back into, generally speaking, not in every case, but generally speaking, into the higher growth type stocks. What's been leading the group for the longest period of time? Well, technology. And there's a good look at the NDX there. But just scooting on back to our daily chart, that quick review first, we're already hitting an RSI that is higher than the prior level. So we're seeing some strength over there. What else are we getting? You can see what I've done over here. I've drawn this sort of flaggish type pattern for a possible trend, a possible flag bounce. This was actually going to be, when we looked at it last week, we said shoulder, head, shoulder. Another one of those interesting patterns. And you can still get a head and shoulders pattern like this, inverted, of course. Breaking above the neckline, it did so. That's a much bigger move right there. It really is. I mean, it still says there's more on the horizon if that pattern unfolds. But that's how people will look at an inverted head and shoulder. I will say that the right hand shoulder is kind of one of these. It's sort of lifted up a little bit. I'm not sure I was on camera when I did that. Yes, I was. There we go. No, it looks like more like that. Yeah. So the point is it didn't quite retrace, but that's not necessarily a bad thing. It doesn't invalidate the pattern. And in a sense, it could be also a sort of a flag pattern too. So keep that in mind. There could be also, believe it or not, there could be a measurement gap in here too that would set us very close to this range. Okay, as we look at that. Now, looking at this, we are going to take a look at some of the technology stocks specifically in here because they are breaking out. And this is obviously very tech heavy as it relates to the NASDAQ 100. In fact, a cool way to just look at this, I just like to go over here and go into customize and just type in just sectors or sub-industries is one of my favorites to look at. That breaks it down the absolute most. We'll put it right after description. You'll just see how much of this falls into that even go. Yeah, it's there. Huh. Can hardly see it. Must be there. No? There. Yeah, it's right there. What is leading on the day? What's been leading the last few days? Let's click on that right now. And we'll see semiconductors. Big movers in semiconductors. In fact, a couple of these I need to talk about today. We can look at all three of these actually that came up on the top movers today. There's some really fascinating news with semiconductors right now that we do want to break down when we look at our sectors here in just a second. But I wanted to show you that right now. Very, very interesting. Okay, we're not quite done though with our market analysis, but just wanted to highlight that. Really, really super tech heavy. We'll see if that does in fact unfold. And before I go any further, look at this. Where's the NASDAQ at relative to that 2000 high? We had a high in the year, literally 2000. Now, I only have 15 years. That's not going to do it for us. We're only at 2011. That was a long time ago. It was 25 years ago. Seems like yesterday in a lot of ways for me, because I do remember that year very well. I'm going to go to my max column over here. My time interval, go to max available. Go to monthly. and let's just see how we're doing. We're way above that level, right? We've cleared that guy for, it's been some time. It did take us how many years to clear it? These are in months. It took us roughly 200 months to get above those highs that we'd seen. Basically about 16 years, 15, 16 years to get above those highs. Well, from that point on, we needed a really big move, and that you can see long term. Now, I'm going to show you this because SPX, remember that long-term moving average we were looking at, the 13 week moving average, the 13-month moving average. And we also looked at a weekly moving average too. Let's add that on just to give us a little bit more perspective on the longer term here, because we've been looking at that. It's called historically a number of bull and bear markets long term if you're into it, and that's the move above that level. So we have actually right now we are not okay, we're roughly halfway through this month, not quite, but we're getting close. It's the 14th today. So what I'm getting at is this candle's not yet completed, folks, but this is a big sized on a monthly chart right here, this candle pattern on a monthly. If this bar holds up anywhere near where it's at right now, this is a Morningstar pattern that is taking out, or I should say, reestablishing potentially a stronger trend by getting above that 13-month moving average. Okay, we talked about those before. They have a long history of getting on the right side of the market. In other words, prices can oftentimes hold above that 13-month for a long period of time. The monthly can be interesting in that regard. That one held all the way here. Look at these. So these are years we're going over. That's like a 2-year rally. This over here, we actually bounced off that level. That's basically a 2-year rally. We're just getting above that level again on the monthly. So interesting. We were wondering, and a lot of people have been saying, hey, are we establishing ourselves? We've looked at the daily to help us with that. Here is the weekly. The weekly, we were looking at the 50-week moving average, very, very close in proximity to the 13-month weekly average, and you can see that was the gap above that level. So some encouraging signs here, particularly too, if the news flow continues to keep being good. Now, what have we had thus far? We had the announcement with the US and the UK had signed a deal. Now, that's probably our closest ally or trading partner, you could say. For sure in Europe, there's no doubt about it. But we'll see what happens with China and some of the other big nations. But that could create some additional news if we get tariffs that are signed that position the U.S. better than they were previously. All right. Okay. Well, let's dive in now and over here into the sector grid, 6-month sector grid, and there is a look at it. All right. Well, we talked about this as well, and I remember talking about this specifically in my swing trading classes, that a lot of times these defensive stocks, consumer staples and healthcare, as main defensive kind of sectors, can weaken if you start to see the economy strengthen, if they get better. And this was the strongest. These were the strongest for a period of time. This has been waning for a little while. Consumer staples more recently, but it's been sort of taken over by discretionary info technology, information tech or technology. Also, financials can perform well too when things are doing better. And by the way, communication services as well. So you've got that. These are all, I would say, yeah, this one too. But these four are having an impact on the S&P 500 index. In fact, you can see it over here. It's starting to look a little bit better. Consumer staples, when they move up, they just don't move up as much. They're not weighted as much. And so you just don't see the strength coming through to the entire index there. But if I go ahead and right click, just maximize this cell grid, as we're just looking specifically at S&P 500 companies, stocks that fit into the technology sector. And where do they stand? Well, they stand right. They've been doing pretty well. If we isolate that, we looked at the NDX, which showed some strength. Now we're just really isolating the technology sector. We're seeing some pretty good strength to it. There's a big gap in there. And with that gap, as I talked in that swing trade class yesterday, we're getting a fair number of measurement gaps, potential measurement gaps that are out there. What I mean by that is MSFT. M MSFT. This is a measurement gap that we've been looking at, did a paper trade on it up to the target, where we're simply just taking the price move from the bottom to the top, and we're adding this from the bottom to the top over here. You can see where we have our targets in place right there for Microsoft. Okay, so that's where they're in place right now. Okay, and so that was just an idea. But see this major gap? Some of these have been getting bigger gaps than others. This was tied to an earnings release. I went through a fair number of these that actually did gap and kind of ran up a little bit higher here. But you'll see that if I move back right into that sector, some of the technology companies are jumping. Some of them are in semiconductors as well. If this was a measurement gap, you could be looking at an extended move. I'm just going to eyeball it here quickly for us, folks, but off the bottom to the gap, measure that gap off the top, somewhere over in this range, maybe above highs, or at least you could say, well, perhaps it's going up to test this resistance level. But maybe, we'll see how that unfolds. But that would be like a price pattern through a gap, a measurement gap, possibly. Okay, there's actually another gap in here too that you could use as well. And we're probably hitting towards those highs as well. I'm using kind of the gap that was tied into that US-China tariff announcement there. And we got a little bit of an announcement, right, with the UK, as I mentioned, getting us going, but it could be interesting to watch. Now, I'm going to break this down a little bit further. I love to do this through the scan tab specifically. Let's see, clear, clear, clear. Let's just look at the NASDAQ. There's the NASDAQ 100 semiconductors. I'm going to get a little bit bigger picture. We are in the scan tab up top here. Scan tab. We are next in our sub tab referred to as the stock hacker. We're going to scan in right there, S&P 500. We're not going to look at semiconductor equipment just yet, although I did want to focus in on that for a second. We're going to look just namely, we want to isolate. We really want to see what is moving in this technology group to give us some ideas of what's potentially out there that we can keep an eye on. Okay, now here is, we'll go ahead and just wait for this to load. We have 69 companies that fall into that technology group. Again, here is the 10-day performance. Look at this, FSLR, 53%. Is that our leader? It very well might be. 53 range, microchip. Okay, let me show you a few things. Semiconductor, 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 semiconductor. We have a few things that might be leading over the last 10 days. Is the last 10 days relevant? Well, that's where we might have had that measurement gap. Let's count them. We don't really have much of a y-axis here, an x-axis to count the dates, but I'm going to go back in time. Yeah, there's 10, that's 10 days right there after that last gap. So what's really been moving here? Well, you got it right there at your fingertips. It's so cool to be able to pull up and see where it's coming in. Of course, you got the charts, the description, and everything here. Folks, if you want this 10-day, I'm going to go ahead and just, this is a think script. It's not guaranteed for timeliness or accuracy, but I'm happy to share that with you just so you have it. Let me pull this out here. This is a little bit different one. This one does not compare relative to the S&P 500. I've adjusted it so that everything that is positive is in green, everything that's in negative is in red, whereas previously, the prior script, I made some adjustments to it, but the prior script was basically a little bit different. In fact, the prior script was one that said, hey, you can still see red, but it's positive, and that's just because it was above the S&P 500. I think that's cool to see, but I always like to know, when it's positive or negative, basically. So that's the way I built this here. 1 second, folks. I'll just get this out to you. Just need to make one adjustment. Okay. I could send that through. Again, though, not guaranteed for timeliness or accuracy, but you get the point on that. But as long as the data that's coming through is good data, which it is, generally on the platform, then it should work out just fine. And there you go. So here is, I'll just put it down here just so you have it, because these can be helpful. And you can change this too anytime. Talk about this in the Think Script class that I teach. We built this. We built some other ones in here. 10-day percentage performance. if you don't have this one, but it is a little bit different than what's been floating out there. Just so you know. So it's been updated. By the way, once you grab that, for those of you that are new to it, copy it, come up here to setup, open shared items, simply just paste it in, preview, import, change the name if you want. I just named it 10-day percent, and then voila, you got it. Okay. Well, I wanted to do this because I wanted to focus on a few of these today that also have very, very interesting news. I'm just going to throw this out because there's more investigation we need to look at, of course, in some of our other market discussion. But AMD, some interesting news on AMD. First of all, taking out, looks like that trend line that I had drawn in there went a little bit higher, so I have to redraw it so it doesn't take out. The key thing with the trend line is you want to make sure you don't violate that trend line, or it's below it. If these draw across and they come in very nicely, they're through there. Trend line break with that earnings announcement. In other words, we're breaking highs as well too, with a nice gap in here. A couple interesting things was two of the semiconductors that I saw out there that could be of interest. First of all, these guys announced a buyback of, I want to say, $6 billion. I believe it's $6 billion buyback of stock shares. So we have that move. I'm just looking. I can't see it here. There it is. AMD stock pops on $6 billion buyback. There's a lot of news today, as you can see. Oh, I was going to say that's all today. It's not all today. A lot of it's today, but that's it. But also, Saudi Arabia is investing in AMD and NVIDIA as well. I don't know if NVIDIA has a share buyback. Both of these two sort of look like a cup and handle. We don't have the handle yet. We got earnings to deal with as well. Keep a watch on these. These could be interesting because of the share buyback situation. Saudi Arabia, I think, is number 2 in the world for technology advancements, specifically in terms of AI. I know Elon Musk was just over there talking with them, and they're really making a lot of strides. Kind of move. The idea now is moving away from petroleum into, technology. Is kind of the next area for them. And so that could be beneficial. I mean, that's a very wealthy country. We don't know. I'm just throwing out what's in the news, but what could happen within those groups. But they just happen to be some of the big performers here as well over the last 10 days. By the way, where is AMD in terms of a performer? I didn't see it come up. There it is. Okay, 20%. 20% NVIDIA, 23%. Yeah, FSLR, all semiconductors that we just looked at, though, as well. Okay, so just some ideas, tying it into news, and so maybe some developments into AI. We'll see what goes on with that. Okay, now let's continue on rolling here. Folks, there is a survey in the chat. If you get a chance to fill that out, that would be fantastic. Thank you, Ben, for posting that, or reposting it, I should say. Yeah, something you like or find effective, love to hear your feedback on it. It is, yeah, you can point in topic requests or just generally speaking, whatever you see going on. My manager does look at that as well. Just as a side note, folks, if you're finding these kind of topics useful, you're getting some use out of it, smash that like button as well. And of course, love to have you subscribe. I know many of you are subscribers. I recognize your names. All right. Let's continue on. So that's sort of, we did a little bit further today. We went markets, sectors, and stocks because they are in the news and they're really starting to show some strength here as well. All right. We'll see how that continues to unfold. I wanted to look at discretionary because that one too is also showing some strength. So just specifically discretionary, if I go back in and intersect this with our discretionary right there, consumer discretionary, we're going to go into all. Remember, I'm going to the very top here. I could always isolate it too if I wanted to into a particular industry, or in this case, sub-industry. That's how it works. Market, sector right here, industry, sub-industries. We'll just go industry again. How many do we have in there? We got 49. Where are our performers here? I'm going to click on this to get this. Oh, okay, I don't have to. It's loading up for us. There we go. So we've got Carnival, Tesla, of course. Yeah, Tesla could fall into that category. Discretionary item for sure. Tesla's been doing really quite well. So is CCL. Let's take a look at Tesla initially. There is our Tesla right there. Potentially a measured move with the Tesla here. What I mean by that is we're looking at a range of Tesla. Here are the highs of that range, and here are generally our lows. We take this price range here, and well, in this case, I'm going to eyeball it, but we kind of eyeball it. We say the next range, that's a little bit higher, sorry. You get the idea. Maybe it's closer to that resistance level. But could we be heading up to this range as an initial next point? Yeah, we have some resistance there, we could. But right now, we've established well, that's kind of really referred to as maybe a triple bottom. We're counting this as 1, 2, and 3. Those are kind of close together, 1, 2, 3. There is your breakout. There's your your higher low and your higher high as soon as you broke out above that range. So the shorter term trend has changed off of a consolidation bottom as well. I know there was a big price target set on this. It was so high I don't even want to get into it, but I mean, you can always check out things in news like that. And that's just one broker's opinion, but we'll see how it does unfold going forward. That is, yeah, there you go. Maybe it will resume the trend. We shall see. We don't know. CCL was the other one. CCL was actually the leader in the group. There is your gap. So a fairly strong gap there with some very good volume, money flow really spiking, as well as RSI as well. So just to give you some ideas on some of the tools we look at to break them down, and then maybe some of the individual sectors or just areas of strength is what we wanted to show. Okay. Let's see. Let's just take a look. What we have. Okay. Yeah. Would you please show once more how to populate technology stocks? Oh yeah, absolutely. So you do this. What you want to do. So we initially looked over in our charts, right? And we saw that. We saw that technology sector was kind of breaking out, leading the way amongst all 11 sectors in the S&P 500. So the next thing we did is we went into the scan tab because it has this really cool tool that enables us to break down the specific group we want to scan in. That would be the market. And so all I did was initially go to the scan tab here, sub-tab, stock hacker, point 2. Next point is the sector right there. So let's pull up the sector and I'll show you how we did that. We click up top here. We scoot on down to industry. Then we find it. I'm just literally just following along with my mouse here, all the way down to information tech right there. Pull it up to the right, and we looked at everything right there. Click. Okay, and then you're good. Maybe you saw that. Oh, I saw that you said thank you. That might have been something else, but just in case those of you just joining us, that is how we did it right there. Okay, let's continue on. I'm going to scoot over here and let's go into our charts and let's go and take a look at the markets now, at market breadth specifically, how we've been doing. We looked at the 200-day moving average, folks. We took it out. S&P 500, the 50-day moving average, we're greater than the 50-period moving average. Some of the new highs, not quite there yet. We've got NYSE yearly new lows. Now, it's not too surprising to see this at quite low levels after the big dip in the market. But let's pull up now our market sector review, and we'll break down some of these points as well. Okay, we are still actually holding up on the McClellan oscillator. Remember, a lot of times what you're looking at it's really kind of I consider it a swing move. This is a swing move. It's like, 2 weeks generally, 2 to 3 weeks, but still could fit within that time frame. There are your 2 to 3 weeks right there, okay? And you get the 2 to 3 week move up or down, and it doesn't have to necessarily be down. It could be sideways too. But when you go below the minus 100 and you go below minus 70, okay, when you're above 100, excuse me, when you're above 100 and then you cross below the 70 level, that's when Mr. Tom McClellan says, hey, maybe you're looking at a 2 to 3 week sideways. This has been fairly accurate as we've been looking at this for quite some time, and we've seen a lot of these that have hit perfectly. Here's another good example. When we took out this level right there, which was going above, it went below minus 100, and then it rose back up above a minus 70. Well, it happened about right there. And it happens at funny points. It says right here, we could start to reverse or go sideways. So reverse, meaning up, which we did do for 2 to 3 weeks. I already mentioned that. Or potentially in a neutral range sideways for 2 to 3 weeks. Doesn't have to happen, but it's an interesting indicator that ties into the NYSE, a much bigger basket of stocks, about 2.7 thousand, 2,700 and change. You get quite a few in there. At advanced decline line, folks, we talked about this last week and we said we're going to keep key eyes on this because if this does start to break out and lead above a prior range, and that's exactly what we saw happen right there. This happened. We broke out before we actually gapped. Right there. You see it? And we said, hey, if we start to take out that prior high, prices can then oftentimes follow with the AD line. I'll share you, I can share with you guys this as well, but you could just find it. Well, you can find it, right? You know where it's at? It's just an indicator that you would find up here. Unless you want it specifically, happy to share whatever to help you guys out, Want to make sure you have the tools for sure. But we broke higher. It did call it. Now, here's the other interesting point. More advancers than decliners on that bigger basket of securities. NYSE, a much, much bigger basket. Look where we're at. We just took out these highs. If I use this level, did we clear the high? We easily cleared these highs. So advancers, decliners at this level was actually lower than when we are now, but yet we're above it. That's another indication that maybe there will be a measurement gap or a continuation of the trend or just a projection of that inverted head and shoulders pattern that we looked at to potentially go on up. So this is kind of confirming a little bit more. We broke above this high. In other words, let's clear this off. When you take out this high right there, which we did do, and we showed you where it took it out, there's just more there's more advancers than decliners. In other words, folks, we are getting that interesting kind of component in the market breadth, the number of companies out there advancing versus declining, right? There's just a higher number, and that can help to solidify those trends in the market. Here's another cool way to look at it. What is the SPX EW doing? That's the SPX EW. What is it doing? That's market breadth. That puts everything equal weight. So when we come over here and we look at this heat map of the 500, we don't get these overweighted moves in NVIDIA, Microsoft, Apple, Google, Amazon, all these big tech names. There's Meta down there. Even got Visa, MasterCard as well. Every little block in here is the same size. So that's your market breadth. And that did break out of new highs. What's fascinating is this did make substantially lower lows than the market. It really did. And this has been making, look at this, 1, 2, 3. We'll call that 3. We didn't see that in the market. The market was this. This has been going down for a while. So we've taken out the prior high, much bigger moves in terms of just the quantity, the breadth of companies, even in the S&P, breaking higher too, as we equal weight that out. All right, let's see the 500 index, taking a look at really a critical indication that we've been mentioning down below. You got the Hindenburg omens. We're back on a 5-year weekly chart. So weekly bars here as we look at this, but the all-important spike in terms of the possibility of a lower high question mark, or is it going to be a change in trend? In other words, are we going to get maybe a smaller lower high, but it's really kind of a higher high, higher low continuation of the trend going forward? Notice the absence here. Let's just draw a line all the way through there and then through there. We have had all the way back further. We've had no Hindenburg omen spikes, none over that time frame. Zero and well, that's not zero. There's plenty there at the top, but it's that next dip that's so critical. The potential for a lower high. In other words, this was really quite clear. We had 1, 2, 3, 4, 5, 6 of them right there showing up. 6 Hindenburg-Omen spikes. So 52-week new lows, substantial relative to 52-week new highs. Very substantial. And when you get that, a large number of lows and highs, you get a fracturing in the market. It can be a fracturing, and that's when you can really start to break down. But it's those lows that can tend to pull that index lower. And that's such a good indication too. And I'd love to talk about this in this class. And I'm so glad, the prior coach, Lee, had brought this up, something I wasn't too familiar with, but it does give us a really good sense actually of, hey, if they're making lower lows, that trend could be starting to tick a little bit lower. If you're getting lower lows, if you're getting these spikes, that can influence the S&P 500 index. And as it influences the S&P 500 index, as we're watching that as traders, investors, we can use that too, if we like to use that indicator, to influence us to say, be mindful of bearish, more risk-off conditions in the S&P 500 index. We're not getting that though. So all else equal, if I just come over here, I'm just going to say, according to this indicator, that is a positive. Okay. Was really wanting to see that. Each and every week, it's very interesting to see how that spike looks. Okay, as it compares the number of bars out there. Now we are getting a little bit of a spike here. Generally, we had to clear that 250, so still keeping eyes on that. We're below the 250, but if we do begin to ultimately trend higher, and what I mean by that is higher highs across the board, like new highs. This is like new high territory. New highs, right? These are new highs. If we get that, we might want to see us getting above the 250, and it's okay to start building up above there. But right now, making annual highs, 1-year highs, we've got currently at 51 today. We've been closer to 100. So we'll see how that unfolds. But you do want to see some progress here, because how do you get the S&P 500 index higher? How do you get the market indices across the board higher if these large established companies, and then a huge number of them, 500 or so, are going higher? And this is actually the NYA. So this is like a large number of companies, but you want to really kind of see that as a reference too. These can all be helpful in terms of that market breadth. Very interesting. We've been saying in terms of our seasonality chart, we do have the average right here of the SPX. That is our average of the last 10 years. Now, all we could say here is, do we start to begin to map this out? Right now, this was a low. Technically, that is a low, and that is a high. We ran up to it, but it's positive in the sense that we might continue on with seasonality like it's been on average for the last 10 years. In other words, at these time frames down here, January, February, March, April, May, all the way down to December, all the way to the end of December, we could start to see these higher highs and higher lows unfold. We could see that. Perhaps there could be more of an indication of it because we are taking out highs right now. It's not going to line up. Remember, these are just different percentages altogether anyways. But we're just saying, hey, percentage-wise, this is how it tends to map out over the last 10 years. But now that we broke these highs, what did we get here? What does this tell us? We just looked at it, but let me just draw it. Higher high, higher low. Higher high, higher low. Higher high, we have that gap in there too. We cleared resistance, and so we have the beginnings of a trend here. This is going up. And if we want to see this year start to look like this, it might not match it perfectly, but that's how the trend could look if it does fall within the average. All I'm saying is the trend could help. And that's something we have not been able to say this entire year. Because look at what the trend has really been. Well, I can't say that since February, because it did look like seasonality over here until it didn't, right? Until we just broke down. Lower low, lower high. Lower low, again, that was a lower high, but that was a higher low. Change of trend. So these can be very interesting highs and lows is what I'm getting at. That's going to be a funny one because it's kind of different, but you can kind of see how this is going to unfold. Higher high, higher low across the board. We'll see if it does. But it's going to be really cool to take a look at each and every week as we go through this. All right. Um, let's see. So this is a short-term chart to see where we're at. I like this because it does give us a sense of where prices have been reacting and either taking out or holding those Fibonacci levels. You can see up top here, 61.8. How have we done around that 61.8, folks? We broke above, we dipped below, we broke above. Bottom line is we cleared it. And when you can do that, sometimes there's a tendency to hold above. According to a lot of traders, investors, they say, hey, if I can clear that 61.8, we can go higher. Okay, for those of you that are new to the class, what we do at the very end is we do look at the 30-minute chart. The 30-minute chart's helpful because then we can actually see our lines a little bit better. And that's one thing we have set up over here. What do you guys see here? We just broke above the next and last Fibonacci before we get to the 100% retracement level. This still shows up, and you'll see all kinds of fascinating indications that will occur at that 78.6. Look at that. I mean, we broke above it, and what are we doing? We're flagging on it. 30-minute chart again, but we're still flagging. All that's equal. That could mean a push going forward. We'll see. But it is a shorter term flag within that longer term change in trend that we just looked at on the seasonality chart, but you can see it over here too. Shows up on the daily. We're just looking at this. There's like 13 more bars that will show up here. You know, because let's see, 13 more bars? Well, yeah, it's for every one day. Yeah, about 13, I guess, if we're looking at a 30-minute chart or so. So something like that would kind of add up, I would say. So, okay. So with that, let's do this. I want to go ahead and just take a look at one more, and then we'll finish it off with that. But the market forecast, we want to look at this at different times. Now, the market forecast, boom, right above the 80. I mean, it did. It cleared the 80. That run, I was figuring it probably would, but there is our 80 right there. You can see it right in the middle of that little area that I had drawn out. But anytime you get above the 80, a lot of traders will say, remember, this is a reference to the market itself, but if we get above that 80, it doesn't matter the direction of the line. The line can go down a little bit. It can go up. It can go down. As long as you're holding above 80, the market, according to the market forecast, is giving investors, traders, an indication of potentially being able to add to trades or put on trades. Now, that's how traders will look at it. That's how some traders will use this. They'll say that's the strength. And you can go back here and look and just confirm this for yourself. This is one of the proprietary indicators that we do have here within our group here, you know, within coaching. We talk about, of course, you guys can access it proprietary to all of you, of course, too, right under here. It's just an indicator. But, you know, getting above this level and holding, you tend to get a lot of these little consolidations over, you know, it can hold above there. I'm going to go one more. We'll go to a 2-year and we'll be set. Here is your 2-year. So the stronger moves in the market, when the market's really trending, there's your 80. Now it's a little bit higher. It's about right there. But when you start to hold above this level, do you see it? Sometimes you do trend up as well. All right. So that's that. All right, everybody. Well, hey, yeah, if you did want to tap in, I do talk about a lot of these concepts. If you're not familiar with it, in my swing trading class, I'm going to put the link down here in case you guys are interested in seeing this. Many of you do come to the class, but if you want to take a look at it and you haven't yet, I do talk about swing trading. Here is that link, just so you have it. I don't know. Is that the link? That is the link. Okay, so that's the link where we just go into more detail on these companies. We look at specific companies that are moving with some of these patterns. A lot of it is pattern trading, I would say, in that class, or just trading with the trend and things like that. All right, everybody. Again, there is a survey in the chat. If you got something useful out of the presentation, smash that like button. All right, everybody. Well, hopefully you have a fantastic rest of the day. We covered some information that could be useful for you going forward. So with all that, great to have you all here. Oh, where do we get the market forecast? Right here, up top. Click on this section and up top in the dropper icon and just type in, there it is, market forecast, and you got it. It's right there. It's in the Thinkorswim Thinkorswim platform. All right, everybody, on that. We'll see you next time.